Welcome back to Shared Practices. I have back with me today. This is a part two. So if you missed part one and you are a dentist who still is worried about finances and has not kind of grown a practice or grown an opportunity where you're really taking home good pay, you've got a way to grow net worth through partnerships or other vehicles, go back and listen to episode one of this series. Episode two, I have with me the CEO and president of Shared Practices, Dr. Alex Sharp. How's it going, man?
Man, Richard, I am great. I'm excited for this episode because I feel like we spend a lot of our time focusing, as we should, on taking people from 0 to 1.
Yeah.
And this is an episode where we're going to help people to go from 1 to 10, where we're going to help people to go to that next level. And this is interesting because I had a great conversation with Suzanne the other day, and some of the feedback that she's received over the years centers around how shared practices, we have a sweet spot. We have a very tried and true way of helping people to take a practice and to double it, to improve it, to grow it, to make that practice into what it could conceivably become. But then there's always that question of what's next. And for us today, we're going to talk about that with regards to finances, of understanding I built my engine, I built my practice, things are humming, knock on wood, relatively speaking. What is that next big, hairy, audacious goal in terms of investing or with regards to financial achievements? Because that's the fun stuff. That's what we put all the years in undergrad, dental school, developing the communications acumen, the clinical acumen to build that practice. What's next? And this is the stuff where I think it's helpful if you're a younger dentist or you're a dental student. It's always good to immerse yourself in this because you don't want to shy away from it. You want to go in eyes wide open to what's possible because a lot of dentists do alternative investments, or they focus on other ways of making money outside of dentistry, and it gets poo-pooed. And a lot of that comes from people doing it too soon. They
Yeah.
haven't prioritized the creation of the engine. They haven't truly gotten things on, I don't want to say autopilot because that has a bad connotation, but things haven't become predictable and hardwired into their lives to where it really is profitable, simple, and sustainable. And so today we're going to talk about, once you've built that profitability, simplicity, and sustainability, what's next?
Yeah. And this now, I was like, oh, I should have brought up this point in the last episode, but I'm actually really glad I didn't. There is a possibility that if you are a certain type of entrepreneurial dentist, and I'm speaking very personally here, that the journey to figure this out and like figure out how to generate income and wealth is fun because the money counts and you don't have it yet and there's something to look forward to, and you can continue to tell yourself the lie of I'll be happy when and there's some magical thing at the end of the rainbow that I'm chasing. um, and you might get to this point and realize, oh crap, like the chase was where it was fun. Like this whole time I've been trying to rush to some point in the future, but actually all along the figuring this out and playing the game when the dollars and cents really count and you haven't figured it out, maybe that's like your playground. And the dangerous thing is there's two ways to keep it fun. Number one, you inflate your lifestyle and all of a sudden you haven't made enough money. Now you got to figure out again how to make more money because now you're not keeping up and you won't have enough to retire because of how you're currently spending. Or you can just blow your life up and burn it all down, and then you have to start over. And to be honest, there's been a lot of mindset work for me recently on realizing, you know what? If everything fell through, just like everything imploded, that would be a lot of fun. Like it honestly would be. And that's an incredibly freeing realization. And I might get a lot of strong, hard disagrees on that from people. Um, but you can do a lot in a short period of time in dentistry as an entrepreneur. And when you've learned the skills of entrepreneurship and you've learned the skills of how to build and grow a dental practice, or a business in general, getting to do that again. And that actually is very often the story of many entrepreneurs of, there is, before there's this Elon Musk, up and to the right hockey stick of financial opportunity, there are crash and burns beforehand. Um, so all that to say, try and savor the journey, because after you reach that big, hairy, audacious goal, you might start to get really itchy for the thrill of building where it really counts. And you either have to take more risk in your business ventures, in your investments, or just go for the next really big thing. Like, okay, well, now I need 3 practices. Now I need 12. Now I need XYZ. Or I need to keep expanding. Or I'm going to build a bunch of businesses outside of dentistry, which might be great. If you're entrepreneurial and you honestly, truly enjoy those things and you're not neglecting the other areas of your life that are probably the important ones, that's awesome. Go keep building, keep growing, keep going for it. But I think for me, that is a really important frame to this conversation before we got too far into it. What are your thoughts, Alex?
I completely agree with you. Like there is that thought that goes through your head to say, you know what, knowing what I know now, if I were starting at zero or starting at whatever, negative 500K in student loans and nothing else, how fast could I build a $2 million practice by myself?
Yeah.
Like that would be a fun game to play.
I mean, honestly, we've seen listeners and people who've bought right, who've done coaching, they've done due diligence, and they've
Yeah.
gone from 600K to 1.2 million in a single year. They've like bought the right practice and literally doubled it in 1 year and have plans to expand and bring on an associate. And the pathway from zero to potentially taking home close to $1 million within a couple of years is a realistic pathway if you're willing to really find the right opportunity, you're really willing to invest in coaching, and you know what you're doing. But not everyone is willing to do all those things. They're not willing to find the right opportunity, they're not willing to invest in coaching, and they often don't know what they're doing, but they think they do.
Part of coaching too, and part of mindset development is understanding that most of us in this game, most of us in dentistry are competitive animals.
Hmm.
And we don't need to look at that as a negative. Like a lot of us that care to listen to a practice management podcast, like you're self-selecting by listening to this right now, chances are you're hungry to improve, you're hungry to grow, you're hungry to push the boundaries on what's possible, you're hungry to be the best. Else you wouldn't be listening to us talk right now. And so don't look at that as a negative. Look at that as, yes, I've achieved my goals. Yes, I'm doing better than I thought I might. Don't have guilt around it, number one, but then don't veer into self-destructive ways of that competitive drive manifesting. Think about Michael Jordan, right? He went out on top. He couldn't stay retired because he was too competitive. And then when he did finally retire after he came back at 40 years old with the Washington Wizards, he became a self-professed degenerate gambler. Like he gambled all the time on everything because he had the competitive drive and he didn't have an outlet. He didn't build himself an outlet that he could funnel that competitive energy into in a really helpful way after he retired. So as dentists, that's where I like to think about what is that next BHAG? What is the next big, hairy, audacious goal? Because some of us are wired to say, okay, I'm going to build the practice. I'm going to get to that level of revenue. I'm going to get to that level of take home. I'm going to get to that level of working days per week. I'm going to get the procedure mix that I want. I'm going to get all of that nailed down. I'm going to drop the insurances that I don't like working with. But then what's next? Because if you don't choose a what's next, that what's next may choose you if you don't have a plan of attack. So then you got to figure out, what am I interested in? What am I passionate about? What doesn't feel like work to me? Some dentists are lucky because the dentistry doesn't feel like work to them. It's enjoyable. They derive passion from it. They're going to do it until they drop dead with a handpiece in their hand at age 90. There are people that are that way. And for them, dentistry is the thing. It's the art form. It's the service. It's where they generate a lot of their sense of purpose. For people who treat dentistry as a means to an end, and that is some subsection of dentists where they like the trappings of dentistry, they like the lifestyle, they like the number of days per week, they like the high level of compensation per unit time. You have to think about, what is my passion if it's not dentistry? It could be within dentistry. It could be developing people. It could be building a team. It could be rallying a group of people around a common goal. That was my thing. Like when I did the single site thing, like that's where I derived a lot of my purpose and pleasure, was helping people to grow in their skills to contribute to a larger whole. That was fun for me, still is on a different scale. But then beyond that, say you've built the practice, say you've got to where you want it to go, say you've got that more or less dialed in, then you think about what is something that I find purposeful that can be gamified and have fun doing, to your point, Richard, because you can treat it like a scoreboard. Like Richard and I both like playing tabletop competitive games. And so my oldest is 10 now, and he's getting into Warhammer and Catan and things like that. So it's a blast. But you have to have a strategy to win one of those games.
Yeah.
And life is no different. Investments are no different. And so for me, the buckets that I've played in outside of dentistry really fall into three major things. It's you do your set it and forget it, like mutual funds,
Index fund.
401k,
Yeah.
IRA, yeah, index fund, yeah, it's not fun, but you do it and you hold your nose and you do it. The next one is real estate, and we can go into real estate because I've done some really smart things, really dumb things in real estate. And then the third one is crypto, because crypto is for a lot of people a big unknown, and for people that are especially uninitiated in crypto, there's you get paint you call it crypto, right? It's like one big broad brush, when in fact there's a lot of different use cases and a lot of different investment theses within crypto to disambiguate from that big overarching label. But
And
it really comes down to, do you derive passion and purpose from learning more about one or all of those things? And that to me is where you need to start orienting your gaze based upon what excites you, what draws you in.
well, and I'd say the last one to add to that is other businesses.
Hmm.
Um, and I actually see dentistry, real estate, and other businesses as actually a continuum of the same thing. And hear me out in this one, which is you in dentistry, you have an outsized ROI in your own business. So you can own and invest, and you increase your take home immediately. You increase the net worth of the asset, and you have a competitive advantage because you're a dentist, and you can be a better owner or a better dentist than other people around you. Real estate is the next default business that you can get lending on, but you still need to find a specialty within real estate. And there's a learning curve, there's risk, but it's tied to an asset. So, unlike handing your brother in law $50,000 for his business, you are owning an asset that you can lose your shirt, you can get upside down on it, and all of those things, but it's an asset, and so therefore it is lendable. It's the default business model that you can get lending and leverage on for better or for worse. And then other businesses are now, how much expertise do you have? How much control? Who are your partners? What are the risks? That's much less defined, much more ambiguous, potential for bigger gains and bigger losses. But also, you really also need to know what you're doing, and choose a few things, and if a few people you trust. And even if you really trust them, they might not know what they're doing, even though you trust them. They're trying to do what's right, but they actually just suck at it. Or the market turns, or all those things. So, and then bonds, index funds, crypto, those are all vehicles you can invest money in that have a variety of risk return. You can balance your portfolio and all of that. Um, and the other fundamental, and I'm interested in your comments on all that, but I don't want to forget this other piece, which was the other fundamental um, understanding here is you need to figure out, what is your lifestyle? What are you burning? What do you want? What's your core expenses? What are your full expenses? What do you want your lifestyle to be? And then multiply that by 30. That's how much money you need to be financially independent and not be dependent on work. And so if you plan on working a whole career in dentistry, if you're saving 20 to 30%, you're going to get there over a whole career. If you create a massive gap between where your current income is and what you're making, and you can save as much per year as you're spending per year, it's not going to take you 30 years to get there because of returns and investments. You're going to be able to get there a whole lot faster. Um, And so then it becomes, how fast do I want to retire? How much do I want to crunch down my lifestyle to make that 30T a faster 30 years of invested liquidity um, arrive sooner by crunching down my lifestyle. So, that's, it's pretty simple, but it's complex in the relationship between how you live, how you're getting there, how liquid things are, how risky they are, how much control you have. And one last story was reminding me of this time that George and I were in San Diego for investigating a marketing company. Um, and the owner of this marketing company, there's like three owners. One of them we'd spent the whole day with, and he was pretty level headed, really smart guy, was feeling pretty good about things. And then like the big dog comes to dinner with us, and it is pretty clear that this guy is a little unhinged and very aggressive and all over the place. So this marketing company that we don't recommend anymore, um, he pulls out a backpack of cash, literally on the table, and he hands it to his flunky and is like, "Okay, I want you to take the private jet first thing tomorrow morning and go put these bets on these different games." And I turned to him and I asked him, I'm like, "Oh, for you, investing in like the stock market or other things is really just too boring. You need the opportunity to really win big and use your advantage in sports betting, and that's your investing vehicle." And he's like, "Yes, absolutely." And so sports betting
If you
was,
put it in academic terms, yes.
yeah, but he was just like very validated in that, like, yes, me. He's like, "Oh, and you can't put these large sums of money online, so you got to go to Vegas." So like taking the PJ to Vegas to be able to put down 50K in cash out of a backpack was his way, his risk tolerance and vehicle for investing. So
Everybody's a little different, yeah, and if I recall correctly, he parlayed some of that passion into a Hariri emoji. You remember that? Where internally they had an internal like Slack channel, and
oh
someone made a George Hariri emoji like
yeah,
to react. Yeah,
yeah,
way back in the day. But no, I like that framework, Richard, of thinking about dentistry as being what we control, really seed to stem, from nose to tail, and that being the initial investment, whether that's us buying a practice, whether that's us building a niche in a larger company, and then also the real estate piece, and then other businesses. And to your point earlier, I didn't have that fourth other business bucket because just frankly, in my own restricted gaze, I haven't had the bandwidth to even think about other businesses, but that is something viable that people consider. I want to spend some time on real estate because a common question that Suzanne gets, and you can't really ask this question in a vacuum, though people do, should I buy the practice real estate? And I think that the order that you laid out answers that question. If it fits within your ability to build the engine properly, yes. If it if it gets in the way, or you're having the pressure situation of, pay this big giant down payment for this building that your practice inhabits, or build out more operatories, or take the training, or do something to expand your actual business, if it's an either or, which it seldom is, but if it's an either or, then you want to prioritize the practice growth and your income generation and your stability of your profession before doing the business. And then you also, or the real estate rep rather, and then you also want to think about, do I want to be in this place? Do I want to stay here? Does it allow me the room to grow? Or am I better off being in a place that I lease, but then my practice itself is larger? What a lot of people do is they treat their real estate as the first step in what I would call, the Dave Ramsey snowball, like the debt
yeah,
snowball, right? So it would be like a snowball in the opposite direction, like a snowball into the good side of your income statement, like where you're growing your assets, your asset column instead of your liability column. And so you get real estate on your docket, and then you can start paying that off, and then you can eventually buy more real estate, and that can be the initial jumping off point for you to learn how do the taxes work for the real estate? How does the loan structure work? How do you collateralize it? and you can learn commercial real estate pretty low risk because you're the tenant, and then you can start expanding into other residential, other multi-site real estate options. But I do like, in a vacuum, buying the real estate when you can, but then it's not a complete negative if you're unable to or unwilling based upon the circumstance.
So, and once again, I love this is fun because I feel like um these episodes recently with George and with you, like stuff just like condensing, like years of talking about this is all coming together. So here's my like 2 minute version of should I buy the real estate, which is what you just said, but I want to like the step by step. So find the best practice opportunity
Yep.
you can find.
Yep.
If you have to buy the real estate, you buy the real estate. If you have to lease, you lease. So that's the first decision. The second is find the best practice opportunity where you have the option to expand. And if buying the real estate gives you the option to expand, because then you can kick out the tenant next door, or you own the building and so you can like knock down a wall and expand, then buy the real estate. Or if not buying the real estate allows you to kind of have first right of refusal on the next space that's vacant and that you can move into that space, then you lease because that's a great opportunity and you should take that. Um, and then all else being equal, yeah, it's great to hold the real estate and it's a risk. And so I've known dentists who bought in downtown Phoenix who this is one of my professors in dental school. And the taxes went up by like 20K a year on that unit. And because of just the area and on owning the practice. And AC units and there's lots of things that or damage to the building and stuff like that. There are risks to owning. And you would generally in the past, we'd always say, well, commercial real estate usually goes up. And then COVID happened. And in 2020, remote work became a thing. And commercial real estate has still kind of floundered over the past couple of years. So it's not a simple solution. I think the first few things are what we just said of practice the growth, drive it, and then if you want to own commercial real estate, this is an awesome way to get your foot in the door, and you're paying down an asset that eventually is going to be paid off, and then your overhead's lower and you can sell the practice and keep the real estate. You've got options and it's great. You can lease it to yourself after you've grown and then turn around and sell the building to an investor as a big cash injection, maybe go buy another piece of real estate. So there's some major plays to be had there, but people get the cart before the horse, especially uh, the two other directions I'll tell people is where they say I have to own the real estate. That is a requirement for what I'm looking for in practice ownership. I think that's asinine. I think that's too extreme.
If you think about it, your dental practice real estate is just one piece of real estate. If you want to get into real estate,
Yeah,
there are going to be other opportunities and maybe even better opportunities.
ground up. So
Oh, yeah.
ground up, you buy the land and you build the practice ground up and then do a startup in it. Just know that's going to be like an 18-month plus journey. You're going to add
Brutal.
a year to however long it would take to do your startup. And if you think about what owning a practice for an extra year would have done for you, it becomes like just really painful to make that decision to do ground up, especially right off the bat. So that's the
That's what
other
you
like, I want to do ground up and I want to own all of it. Just know you're setting yourself up for a longer journey to your primary cash vehicle and your primary asset. So,
well, you
anyways,
you
sorry.
you do ground up. In my mind, we have clients that have done ground up, but the difference is they've done ground up while being in a practice in a different location.
Yes,
Like their lease ends and then they move to the real estate that they then own. It
100%.
would be really hard to say I'm gonna do a scratch start, no patience, no nothing, and I'm doing a ground up. That would
Yes.
be hard. People do it
My
and
friend did
maybe
it. And I told him, I said,
yeah,
Merkley, don't do that. And he did it anyways.
that would be hard. I mean,
It
it
took
can
him
be
forever. He
done.
was right. We were right. So,
Yeah. Well, just
um,
even doing TIs, even going into a space like a gray shell space, a space that was not previously intended for dental, and then making it a dental office. That still takes a while. That still takes, it could be close to a year from the initial intent all the way through opening doors. So it's better just to come in ready-made and prioritize the dental practice. And then if you get into other real estate stuff later on, then it's easier to disambiguate the dental office and the business from the actual real estate, the four walls,
Yeah.
because then you're able to take a more sober, rational view of what the investment opportunity is. And one quick word on that, I had a really great lunch with a friend of mine, and he was wanting to pick my brain on real estate stuff, just with the little experience I have. I mean, there's people that have been doing this for decades, and I've just been doing it more hot and heavy for about 5 or 7 years. And one of the things that I told him was that so much of it is market dependent. So much
Yes.
of people's success in real estate, even your month to month success, is dictated by what you buy the property for, like what your purchase price is, what you're able to get in it for, because timing is everything. It doesn't matter how much you increase rents, doesn't matter how much you increase occupancy rates. A lot of those other controllable variables, if you want to think of those as kind of like your variable expenses versus your fixed expenses in a dental office,
Yeah.
you can control your variable expenses to a degree within a certain variance, but then your fixed expenses are sort of just there. You
Yeah.
can't do a lot to adjust those. And in real estate, it comes down to purchase price. And that's where having the wherewithal to say, you know what, the it is not a buyer's market right now. It is a seller's market. I can't get a great deal on what I want to get in for. I'm going to be violating the 1% rule. So there's a timing element to real estate too that I think you have to go in staring at, because when I got into real estate pretty heavily, I didn't buy at the worst time with the units that I bought, but I could have definitely bought at a better time. Like, I'm not as profitable as I would be had I bought at a slightly different time. But then you get into the rabbit hole of it's available right now. Somebody else is going to buy it. You talk yourself into it. You
Yeah.
run the numbers. And so I would just say measure twice, cut once when you're getting into residential real estate that doesn't, or any kind of real estate that doesn't have your own dental practice in it. Like, it's good for that first one to be a win unassailably, because otherwise you're going to have a bad experience. You're going to sour on it, and then you're going to potentially veer away from real estate before you've given it a fair shake.
Yeah, and so to add to that, I would say um buying right is what you just said is everything. And the reason that real estate is still a good vehicle, not only can you get lending on it, it's a default business model, but it is an imperfect market. So,
Mhm.
unlike the stock market, you can have a competitive edge if you know your area and you know your niche, whether that's single family homes, whether that's mobile trailer parks, whether that's storage units, whether that's multi unit like duplexes and fourplexes, or 20 unit plus, whether that's commercial, large, big development. There's so many ways to do real estate, but you need to pick a niche and an area and to know, is this a good time to buy or not? And have the discipline to not buy. And that might mean it really doesn't make sense to be doing this niche in this market at this time because there's not a lot to buy. And I've got a friend here in Indianapolis who is looking for that kind of like 10 unit plus multifamily. Um, and it's a really hard market to buy in. And he's been trying and trying and trying. He's trying to leverage pretty hard. So like if he finds the right unit, he's willing to get lending on it, on the whole thing. And he's not finding anything. And he's actually shifted to looking at businesses rather than looking at real estate because he had the discipline to not buy when deals are not good, and he knows what he's looking for. He's gotten enough depth and expertise. I do want to hear, can you list off what you've bought in real estate, just like a summary version of, single family, multifamily, commercial, all that stuff?
Yeah, so the first one was obviously, well, I did the anti-SP thing where I bought my primary residence before I bought my practice. So,
Tisk
hit
tisk
me with the ruler.
tisk.
Yeah, hit me with the ruler. Yeah. But I bought it at a time when interest rates were, I think I got 3.1%
Oh yeah,
interest on a 15-year mortgage.
there we
So
go.
that was at 2016 Arkansas prices. So
Oh yeah.
you can do the math on that. That was a great mortgage. Then the next piece of real estate was the dental practice real estate,
Okay.
where I bought my dental practice in January of 18, and then I bought the real estate January of 19, which was a function of the preference of the seller.
Yep.
He wanted to retain the building for a year, which was honestly perfect because that way I was able to save money for a down payment after having bought the practice. So I bought that January of 19, started paying myself rent on that. Just kept the rent rate roughly the same. I increased it maybe 10% just to not run afoul of, any it looking not being in market. Then from there, I bought a single family home locally that a friend was selling. I bought it for $87,000. It was move-in ready, right? I mean, just insane. But it was different market than
Yeah.
what we're in right now. It was 5+ years ago. And then so the payment on that every month was like 375, and then rent was way more than that. So
Yeah.
I made money on that and then sold that house for a profit. So that's what I'm talking about. If you buy at the right time, then you're making money every month on the rent,
Yeah.
and then you're making money when you sell the asset. And then you have to crunch the numbers on, am I better off just selling the asset, paying taxes, or parlaying that into the next asset? Because sometimes the market appreciates so much that you'd be making on the transaction of selling the property what you'd make amortized over years and years and years doing just rents. So then sometimes it's better just to sell and then roll that into something else. The big one was I had the same thesis as your friend in Indy where I wanted to get into multifamily. So I'd looked for a long time, and then I found one where it was an 18 unit duplex development that had been built pretty recently. And I bought it not necessarily at the height of the market, but I definitely could have bought it at a better time. And the payment on that uh, still is like 11,000 or so a month, a little over 11. And I was able to increase rents, increase occupancy, and now it turns a profit, like a good profit every month. It's not amazing, but it's solid. But the point is that, like you said earlier, it's leverage. You're able to use other people's money to pay off the asset over time, and you just have to network your way into finding those. Like
Yeah.
as your friend noticed that there aren't that many out there. A lot of times people in the past would develop those. They'd buy the land, they would get everything subdivided, they would build it, but then construction has been weirdly disproportionate with inflation. Like construction costs have remained even more inflated, even post COVID, compared to all other costs.
Right.
So it can be really hard to build right now. And so then, yeah, you may have to pivot into commercial. And commercial, I've researched quite a bit over the last couple of years, but I haven't gotten into any more commercial just because it's a lot of unknown right now because we
Yeah.
don't know what the continued disruption to in-person workforce is going to look like. Some of those traditional different types of commercial developments that are populated by attorneys, CPAs, single business people, like what's the term? Not entrepreneur, but like the army of one type people, they work from home more than ever. So then it's a risky business to buy that. There was a building I was looking at, and it was a combination real estate office, and then it had some individual offices attached that were rented out to individual people. And I ended up passing on that just because I didn't have the warm fuzzies. And then the person that ended up buying it was a larger real estate company that then used it every day for their people. So I think commercial real estate is kind of like dentistry, where if you have a business to plunk in there that's stable, that's great. But then you have to really figure out, who am I going to lease this to?
You have to market the property. You have to have a plan to fill it, which is hard to do. Like, how do you find commercial tenants and do that on repeat, and then be that aggressive jerk of a landlord who's, always raising stuff and investing as little as possible as needed into the unit. And it's the more, sometimes the more heartless you are, like the better a landlord you are in that commercial space. And the same could be said for residential as well. But that's where it starts to be difficult, is that this is its own skill set.
When you did your real estate licensure way back in the day,
Yeah.
did you study mostly residential, or did you learn a lot about the commercial piece too? Because just with SPG the last couple of years, I've learned more than I ever wanted to know about how leases are structured and how they're personally guaranteed and how um, there's just a lot of front loading of control mechanisms in place because leasing a residential piece of real estate to an individual or a family is one thing, but then leasing a piece of commercial real estate to a business entity is a lot more murky. So how much background did you have when you were doing your real estate licensure on commercial, and then how do you view commercial opportunities now?
First off, I'll tell people if you're trying to learn about real estate investing, do not get your real estate license. Like that is the wrong way to do it. And second off, no, you don't learn a ton. You learn all
Okay.
about like regulations and listings and blah blah blah. And I was planning on getting like a commercial real estate. There's like a CRE is like a certification you can get, um, and I never got that. But just absolutely the wrong way to go about it. And you're right, it is very complex. Um, the other thing I'll say, if we can shift gears, unless you've got a lot of other things to talk about, okay. The other thing I'll say here is this question of whether you should take on another business, take on another practice, expand your current practice. There does need to be a look at your life holistically of what is this going to get me other than like, is this a game for me to play? Is this like how I want to spend my time versus is this unlocking something that I don't have right now for myself or my family? And how does my spouse like, does my spouse have dreams that have been on pause for like 10 plus years because I've been off
It's
doing
important.
doing the Richard show over here, and like they have sacrificed so much to support your goals and your vision and your dream. Are your kids in this golden window of age 4 to 14 where like they'll spend time with you and they care what you think and you never get this time back? And is this a phase where it's like, okay, can I really get stuff going and then put stuff not on cruise control, but on like, okay, things are good here. How can I start to trade time for money and then step back and focus on my family, focus on other things? Can I optimize for purpose and fulfillment rather than optimizing for retirement or optimizing for other things? And for me, like that's the current journey is, can I, I've got this weird men's group on the side that's dentists who are burned out who want to get in shape. And on the face of it, it's like, Richard, you've gone from being the CEO of shared practices to being a personal trainer for dentists. And but I freaking love it because it's optimizing for fulfillment. And being me, I'm going to figure out how to make money along the way and support our family and build a business and build stuff differently. And that's fun for me. Um, but if you don't step back and ask, what am I optimizing for? And that's where books like I'll Teach You How to Be Rich, like and Die with Zero really pull into question this like I need to stockpile cash for the future, and that is the end all be all. That is how I've arrived. That is how I'm successful, is that I now know 99% of the time I will have enough money to die with still a whole fortune invested. And instead, can I optimize for experience now when I can actually use that wealth? And we talked about that pendulum of, cheapskate and YOLO. This is now the phase to start to seriously look not at the YOLO, but at the what do I really derive value from? And can I overinvest in those things and free up my time and my stress from the stuff that does not produce those results? So you've built an economic engine. Don't assume that building economic engines is the thing, and instead optimize for what your life can really be built around. And for some people, that might be hard because they just love the economic engine. Then that's fine. But just come over here and balance a little bit before you continue to drive down that economic engine path.
Yeah, there's only some people, it's not everyone. Not everyone treats the economic engine as the end all be all. Some people might think they do, but really, if you care about your health, your family, or hobbies, or other things, then you may not be as single minded as you think you are.
Yeah.
And sometimes you reach some apex of achievement, and then that teaches you how single-minded you're not. So that's one perspective. And then yeah, the other perspective is having the wherewithal to determine what is enough. And that was one of the things from Die with Zero that I liked was the realization that so many people die with way more than zero,
Yep.
which is not a bad thing because that could be your sense of purpose is being able to bequeath assets to the next generations. That's a very compelling purpose. But then there's also the fact that I'd like to enjoy some of those fruits of my labor, health permitting and time permitting. And that's where the juggling act comes into play of what is enough, how much of this engine should I prioritize continuing to function right now? How much TLC does the engine need versus how much TLC do other parts of my life and other passions and other pursuits need? So I think it's the forever balancing act. It's the understanding that the pathway to financial success lies somewhere in between the Dave Ramsey penny pinching and then the base jumping YOLO. It's
Yeah.
it's somewhere in the middle.
D- this is exactly the kind of conversation that like we we need to have, and you need to have with other people who are as far along in the journey or even a little further than you are and can give real perspective. And these are the conversations I love having. I had a conversation with a dentist 2 days ago who's at this like, I've built a $2.8 million practice and I could expand and do a ground up build of a 20 op practice. He's like, okay, let's go big or go home. But I pushed back and I said, yes, you can. And I'm sure actually that would crush it and you'd do super well and you'd be hard to run out of space, which would be a thing that we never say, and maybe you could. It'd be really cool if that was the case. It also might be this is like the wrong time to do that in your career, and there might be other things you can prioritize, and you have the land, you can do it in 3 years, you can do it in 5 years. But that's the kind of conversation I love to have. And there is real opportunity costs in terms of burnout, stress, sanity, cost to your marriage, lack of focus on God and faith and all these other things. And that's what I'm pushing Dennis on right now. My goal is to like help Dennis wake up to, yes, figure out the financial piece first. Like I'm still a huge fan of that, but then come up for air along the way and have your finger on the temperature of these other aspects of your life and don't lose them along the way. And you can do both. You can be very successful financially. You can find balance. You can find purpose. And that's a lot of fun. Alex, I really liked having this conversation, and I think some of the topics that like we hit on before in shared practices before we archived everything, from like crucial conversations, culture, leadership, like I think there's a whole set of conversations we need to like have again, and maybe even do this as a regular episode type. um Now that we've lived more life, now that we've been through more hiring and firing and culture and drama and ups and downs and seen that all together operationally, I think we have a lot more fun conversations to have.
No, definitely. And one thing that I want to add to what you were just saying, Richard, is the seasonality of this career. And I was reflecting with Lizzie last night. We were talking, and you, God willing, there's a lot of life and a lot of career ahead of most of us. And I was thinking about empty nest period. Like I'm not going to just be done in the empty nest period. And that goes back to the die with zero piece. Is like you're
Yeah.
talking about your friend that wanted to do the 20 out practice. I mean, you could make an argument that you get the kids out of the house and then you go big if
Yeah.
it's your passion. Like if your passion is dentistry and your passion is running a big practice and going for broke and seeing what can happen and just building the best possible dental practice ever, you could probably do that better at 55 than you could at 35, to
Uh,
be frank.
and you can
Like
even
I'm
like put your own twist on it of like, you know what, and
yeah.
I'm not going to be clinical, hold my beer, let's go, like,
Yeah.
I can do this.
But
Yeah.
but the to do everything all at once, which is what we tend to wanna do,
Yeah.
that's how you get burnout when you're trying to fill all 6 buckets of your life, all different categories all at once. Something's gonna give, so it's better to figure out what do you want to quote unquote "give" right now? What can be, deferred until later? And so I like that. I mean, if you're doing a big giant ground up build, what for is the question to answer.
And is it right now?
Yeah.
And it may be, and it might be like fantastic and prove me wrong type thing. But I'm gonna push back first. So, Alex, thank you for carving time out of, I know, your extremely busy schedule to have these conversations and to give back and share your expertise and journey with real estate and perspective. This was a lot of fun.
Loved every minute of it, Richard. Thank you for taking the time, and hope you have a great rest of the day.
Awesome. We'll talk to you next time on the Shared Practices podcast.